Well, if today's finance ministers' meeting is to succeed in stabilising the euro further, President Nicolas Sarkozy says that France and Germany can't afford to disagree on issues like trading bans at times when the markets are so vulnerable. Well, as Eric Coleman reports, a few things can cause quite as much concern in eurozone markets than divisions between its two biggest member states.
They are at the heart of Europe, but can't, at least publicly, agree on the state of their shared currency, the euro.
Je ne crois absolument pas que l'euro soit en danger.
Ist existenziell.
Angela Merkel touches a nerve, speaking in dire tones just ahead of a parliamentary vote on a $1 trillion rescue to stem the regional debt crisis.
If the euro fails, then Europe fails.
This after shocking investors and its eurozone partners by not consulting on a unilateral move to curb trading in regional bonds and German financial stocks. An idea already under discussion within Europe.
The split is more about communications than about reality. France and everybody else has a legitimate right to be a little annoyed by that, although it really only hurts Germany. And so once the EU makes its decision, Commissioner Barnier and those people make their decision, I'm sure that will supersede anything the Germans do, and this will all be forgotten.
Merkel isn't stopping at trading bans. She also is out front pushing a financial transactions tax, which these Robin Hoods in front of the finance ministry say is necessary to de-arm market speculators. Spats over how to resolve the deficit crisis have surfaced before. Just 2 months ago, Merkel rejected Lagarde's suggestion that surplus countries also make adjustments. We won't surrender our strengths, Merkel told Parliament, of her country's export prowess. Germany's trade surplus, after all, was 135 billion euros last year, while neighboring France was 43 billion euros in deficit. It's this financial muscle that helps Germany put more funding into Europe's bailout than any other country. But divisions with its partners have investors rattled.
The biggest negative effect on Europe is the lack of coherence and agreement amongst the eurozone countries. Today, we still aren't in a scenario where markets would fear government intervention.
A house-divided scenario that may continue to plague Europe's markets for weeks to come. Eric Coleman, Bloomberg News.